The Bank of Canada hiked rates by 25 basis points today, and here to talk about what stood out in the statement is Andrew Kelvin from TD Securities. Thanks for being here.
Thank you for having me.
No surprise that the Bank of Canada hiked today, but talk to us a little bit about what was notable in the statement.
There were a few subtle changes to the way they described the economy. They were encouraged by some of the recent housing data. They thought that suggested that the market was starting to stabilize after the B20 regulations that came in January. They are seeing the rotation from consumption growth to business investment, which has been something the Bank of Canada has been looking for quite some time, and that should be construed as something they see as, I think, very optimistic as well. So largely as expected, they will continue to move gradually. The next move in rates will be higher in their view. But nothing too surprising, I suppose.
You mentioned the gradual pace of rate hikes. They also mentioned, though, a real focus on data. And specifically, inflation's received a lot of attention today. It's near a 7-year high. We're above target right now. Do you think that matters, and what are you watching on the data front?
Well, we're still close enough to the bank's target range that they wouldn't be too concerned by headline inflation at these levels. And they look at core inflation measures that try to strip out some of the volatility. So the core inflation measures are actually running it at 1.9%, so effectively at target. And they've also said that as long as inflation is expected to come back to their target level at the end of their forecast horizon, they're happy to look through these transitory shocks due to things like minimum wage hikes or higher oil prices.
The last time I had you on the show, you talked a little bit about the loonie and said you thought it was at about fair value. Today, after the rate announcement, we were up about 0.1%. What's your outlook going forward?
Well, in the very short term, we think the next move in the loonie will be lower. We think we get down to, I guess it'd be about a 74-cent loonie, just because the upward momentum from oil prices probably has mostly faltered at this point. And the next move in central banks is going to be from the Federal Reserve. Rate differentials going forward should support the Canadian dollar depreciating versus the US dollar. Take a longer term view, 74, 75 cents seems about right.
And I'm going to close off by asking you about your outlook going forward and quote you again. You highlighted that you're thinking about 2 rate hikes per year going forward. Is that still true? Does that hold?
That's still true. The bank has opened the door to perhaps maybe a little bit quicker pace of tightening just because they are data dependent. If the data does reach or surpass their projection heading into October, it certainly would be in play, but we think the most likely course would be for them to continue at 2 hikes per year.
Thanks very much.
Thank you.